What's up, everybody? What's going on? Hopefully, I've had a great trading week. This video is going to be a quick one, the short squeeze on silver. You guys got to be very careful. Um, I know the whole thing about GameStop and everything like that, the short squeeze, the numbers say for GameStop that short squeeze is 100% accurate as far as mathematical terms goes. You shorting something over 100%, eventually, if you get enough buyers to come in and hold their positions, it's going to get squeezed. That is 100% mathematical equation. If somebody were able to come up with a math equation behind the whole GameStop squeeze, it comes out to be accurate to the dime. So it's not like something where it was fabricated or manipulated. No, it's just a fact that if that were to have happened, which it did with GameStop, the price was going to keep rising. And I'm pretty sure you're going to see continuation of rising as long as there is no selling coming in as far as whoever has the actual shares in the market. Uh, so that happened with GameStop, correct? Everything was there. There's a little bit difference when it comes to silver, when it comes to Forex markets, when it comes to commodities. You're playing with a different ball game now. There is no centralized. The first thing is there's no centralized government or institution that controls them. It runs through a whole bunch of institutions, a whole bunch of different governments. It doesn't have a centralized spot where you can check spot gold, you can check spot silver, crude spot. You can't do that like you can with the stock market, where every share is calculated down to the science. So the other fact of how people will do it is by tick action, especially if you are trying to trade the market based off of a squeeze. In reality, commodities and other forms of currencies is a means of a tool to exchange money. It really does not affect the fact that they can care less where price is at for them, these institutions, when it comes to commodities and other currencies. It's about moving money from one asset to the other. So they can care less even if the price reaches $1,000. It's to them is how much they can move that money from one end to another. So if they feel that they're going to get shorted, squeezed, they're just going to take out their positions and the short will stop. The price won't move anymore. So there's a different way to trade this. If you're going to trade silver or gold into a long position, I'd recommend watching the chart and watching the volume more than anything else. The volume will tell you everything. So right now we're on the weekly on silver. So if we were to look at the weekly on silver, the highest silver's ever been was roughly 49, you can see $50. The thing is with this, when you had such a huge amount of increase in price, this was caused by some news, and at the same time there was a little manipulation with the fact of a lot of long positions start to come in and show where you couldn't even get into a position unless you had like a limit order above, like, I think it was like $1.75 to $2. You would have to put your limit order for even to be filled. How many long positions kept on going in as soon as we broke this area right here of $20, basically it was, and then it kept on continuing. So this is our mark, it's $50. This is your highest you've ever been in history on silver. So with that effect, I want to show you guys something. So people thought maybe at least maybe it could went to $100, correct? The problem is look at all this volume. This is weekly candles. Look at all this volume that started to increase. Every time we would go up, we get an increase in volume right here. You can see, of course, this is not actual volume because, again, it's not centralized. You cannot centralize it to anybody, no institutions, no government, anything. These volume bars that you see here is based off of tick action, how many times the bid and ask have been hit in a certain period of time. So in a weekly, how many times have been hit. I don't use the weekly or the daily for volume to indicate as taking a position. I go down all the way to the 1 hour, but I'm just showing you how accurate these volume bars can be. So you had this volume increase right here. We got to the highest volume ever in history came on that day, ever in history. This is a clear sign when it comes to currencies and when it comes to commodities and other forms of asset-based, non-stock kind of markets. When you have such a high volume into the upside, that means there's going to be a short position coming in hard, or there was short positions being taken as price rose. You don't enter the trade for a short unless you get confirmation. The problem is that confirmation for the weekly was already done and over with. It happened on that day right there when it went $47, $48 all the way down to about $33. So yeah, that's what happens when you trade off of a weekly on commodities or currencies. I don't trade the weekly, I don't trade the daily, mostly trade the 4 hour to the hourly. So let's look at now the recent times of silver. For a good, probably you can say since the summer, we've been in an uptrend, and it's been a strong uptrend for silver. Could possibly short positions be turning into longs? It could be. Only time will tell if we can actually break out of this $30 range. The problem is that's a lot of volume. As I said previously before, it's going to be very hard to break this. That means there was a lot of short positions that were taken. Remember, again, I'm all for the GameStop thing that happened and everything like that, and it's still happening. 100% all for it. You know, it shouldn't be allowed for any company to short in that manner, especially when it comes to stocks and things like that. But when it comes to silver and commodities and gold and currencies, it's a different ballgame. Really big time different ball games. They can hide whatever they want to. They can do whatever they want to. There is nothing that centralizes them. They can open offshore accounts and do it offshore, and nobody will know. There's so many different factors comes to play. So your best bet is to watch the volume. These volume bars are a huge sign of when things are starting to go opposite of whatever direction it is that it's continue up. So right now with silver, we have this strong push up right here. Huge volume came in right here and we started to continue to push down. We broke a lot of positions. Now, what they could do is a lot of fake breaks. That happens a lot with currency markets and commodities. So let me show you right here on the 4 hour. We had that day on Friday. Huge increase in volume came in to the upside. We came back and we broke it. Volume kicked it back in again. So now for me, this is kind of looking a little bit skeptical that these guys are going to let this thing ride up higher. They will probably let it go past $30. And if it passes $30, you see an increase in volume with a confirmation. So let's say, for example, you see something like this. Let's say, for example, you see it goes up. It hits $30 over here, passes up. You see a huge bullish candle. A lot of people are going to buy this, right? But the thing is, you got to look at the volume bar. If you see a high volume bar, like something in this range right here or higher, and it breaks above with a bearish reaction, so something like this, for example, something like this, come right here. For this time of day, this is a lot of volume. For that time of day, 5 a.m. to come into there, right there at that high, on a resistant level, with a bearish reaction, that's indication that you're going to have a sell-off. Nobody's saying that it means you're going to have a huge sell-off to the downside. This thing's going back all the way down to $2 or something like that. I'm not saying that. Thing is it takes a lot longer time. Even if you're going to put orders in, it's going to take you a long time. You're going to have money tied up. That's what I'm just saying. And for what I've known is, from anybody else that has been on Wall Street bets, these guys are not investors. No one over there is investors. So if you're looking for an investment, this is not the investment opportunity of a lifetime. You can do it as far as just holding your money, just so it doesn't depreciate in value as far as cash goes. But I'm not a financial advisor, and I would not recommend, in my opinion, to conduct anything that far as investment goes on these things. But again, I'm going to say this one more time. When it comes to a short squeeze on silver or other commodities, you have to be very careful. You're not dealing in billions of dollars anymore. You are dealing in trillions of dollars. Literally, the Forex market trades as of 2020. At the end of 2020, I think they said it reached almost $6 trillion on average a day. $6 trillion a day, not a year, $6 trillion a day. Bigger than any market out there, any of the markets combined. So just be careful and know what you're doing when you are coming to take a long position. Even if you're taking long position on a non-leveraged account, go for it by all means. I mean, it is what it is. It's commodities. You know, you're gonna have price rise eventually. But if you're doing it on a leveraged account, be very careful. And if you have any questions, please leave them in the comments below. I'll be more than helpful if you guys hit the like button. It helps out to get this news out to other people just in case they are not seeing what is going to happen. And peace out.